In this episode, we speak with Anuj Shah, a managing director and the head of ESG and impact advisory at Stax. Anuj advises private asset managers, corporations, and investment banks on value-enhancing approaches to ESG integration, sustainability strategy, and impact outcomes. Anuj was recognized as one of the top 25 sustainability consultants and leaders of 2024. Stax is a global consulting firm that supports corporate and private equity clients across industries such as the technology, healthcare, education, and consumer sectors. The firm delivers data-driven insights to help clients accelerate growth, boost profitability, and make smarter investment decisions. I'm your host, RJ Lumba. We hope you enjoyed the show. If you liked the episode, click to follow.
RJ Lumba is the executive chairman of Market Insight Media and managing partner of Growth Cap. He is the host of Top Consultant, a podcast featuring today's best consultants who advise and provide services to corporations, governments, nonprofits, and other organizations. Executives and key decision makers tune in to Top Consultant to identify the most knowledgeable and experienced consultants for their most important projects.
Anuj, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Yes, thanks for having me, RJ. I appreciate it.
Really love the area that you focus on in ESG, and it's topical. It's kind of waxed and waned. But maybe, let's start at how you got into this specific area. It seemed like you were part of, at one point, investment management, Lehman Brothers, and Morgan Stanley, but maybe within those roles, there was some ESG overlay, perhaps not, but curious as to kind of your career evolution.
Yeah, no, it's a great question and something that, frankly, oftentimes you have to kind of go back to think about how did you get here, right? And what your journey was. And I'd say it probably goes back to the financial crisis in many ways in 2008. And as you noted, RJ, I was working at Lehman Brothers at the time. And so Lehman filed for bankruptcy in September of 2008. I lost my job there in March of 2009. And there was a lot of reflection that went on during that time. I think for people that worked on Wall Street, that worked in financial services, more broadly speaking. For me personally, it was, how did I get wrapped up in a system that ultimately cost me certainly money, right, and savings, but also my job and what I felt like was my career at the time, for nothing that I did, right? The group that I was involved with, nothing sinister. It was all sort of above board, as you noted. It was part of the investment management team over there. And I felt like there had to be a better way. The capitalist system, did it require some type of reform? And these were the kinds of thoughts that were going on in my head at the time. I was fortunate enough to rejoin Morgan Stanley shortly thereafter, where I had worked prior to graduate school. And then in April of 2010, I still remember this well, I was reading the New York Times and I saw the word impact investing mentioned for the very first time. I'd never come across that term. And it was in the Wealth Matters column of the New York Times written by Paul Sullivan. And that was my light bulb moment. It basically, for those that may not be familiar with it, impact investing is investing for positive environmental or social return while earning a financial return at the same time. And I felt like this was something that I wanted to do at some point in my career. I wanted to be in the impact investing world. At the time, ESG was known, but it wasn't as known as it is today. That wasn't the term that people were using. It was more impact investing. So fast forward, I started working at Morgan Stanley. Fast forward even further, and my role was head of strategy and business management for Morgan Stanley's private wealth management business. When we were looking at the strategic challenges or priorities of the business, private wealth management within Morgan Stanley at the time, we're talking around 2015, 2016 now, we were talking about the pending wealth transfer from baby boomers who had accumulated a lot of wealth to their next generation, their children and their grandchildren. And at that point, I brought into this conversation that we were having internally that people of younger generations who were not our clients at the time were much more apt to align their investments to their values. And what does that mean? And in many ways, that was impact investing. That was the opportunity for those individuals to have access to impact investments. And I started to kind of thread the needle between our business, Morgan Stanley Private Wealth Management, and this product, this investment product, impact investing, and saying, if we are looking at kind of doing a traditional SWOT analysis, right? Strength, weaknesses, opportunities, and threats to our business, this fits. The average age of our clients at the time was probably north of 65, 66, 67 years old. We knew that that wealth was going to be transferred from those individuals to their children and their grandchildren. We knew that those children were more apt to align investments to their values. It led to, well, what types of investment opportunities do we have available to those individuals that, again, are not our clients? We need to attract to them. We need to appeal to them to be our clients. So I started looking at our platform. There was a team that looked after it, the Global Sustainable Finance team at Morgan Stanley. They did a tremendous amount of work building out our platform, but the platform was oriented much more towards a retail investor, not an ultra high net worth investor. And we're talking here about individuals and families that have minimum net worth of around $50 million and north, right? So that's just the minimum. A lot of our clients were worth $100 million, $200 million. Again, this is 10 years ago. So I felt like there was the need for us to build this platform and to build it out specific to appeal to younger, ultra high net worth. And this was a business priority. It was part of a business strategy. So I was well placed in the organization at the time and started to agitate for, let's carve out a separate team to do this work. I was able to have the right conversations around doing that, but ultimately I was unable to get this done. And this was, now we're talking about the end of 2017. I'd been talking about impact investing for 7 years at that point, almost 7.5 years. My wife was getting sick of hearing me talk about how excited I was, and this was the opportunity. And finally, I'm putting my passion together with my work, but I was unable to get it done. And I decided at the time that, frankly, I was obsessed with it, that I really need to do this as part of my career. So I resigned from Morgan Stanley in January of 2018, took a leap, and said, I'm going to start my own firm. I feel like I have a role to play somewhere in the middle, matching those that have capital with those that need capital. And I started my own consulting firm doing that exactly, had a couple of clients sort of working, helping them on business development efforts. The end of that year, I came across a firm that was looking for a head of business development. They were a boutique ESG advisory firm. Frankly, at that point, I didn't know too much about ESG. It's adjacent to impact investing, but was a bit more of the mainstream version of impact. And that firm was co-founded by a professor at Harvard Business School. They needed someone in Boston. We had moved to Boston. And so I joined that firm, and that was the start of my ESG advisory career. And I've been doing that work ever since.
And curious, when you then were involved in business development for this ESG consulting firm, how much of the work that they were doing, were they involved in impact investing at that time, or were you helping to bring that in? And did you stay involved in impact investing?
So because this firm was co-founded by an academic, a lot of the work that this firm was doing prior to when I joined had a research orientation. I came in and instantly brought credibility to the investor class, so asset owners and asset managers. And we were then able to get in front of those individuals and those prospective clients and speak to them about what their needs were and how we could solve for their needs. And that quickly became an offering around ESG integration. And we can start to unpack this a little bit, but essentially ESG, looking at environmental, social, and governance factors and incorporating that workflow into investment analysis. And we worked with clients to teach them how to do that, to build a framework to do that work. And we were able to kind of pivot the organization at that point where we started to win a lot more business from investor clients. So I kind of stayed in that lane, but behind us was the rigor of academic research and the fact that we saw there was alpha in this, that essentially firms that, or let's say companies that focused on improving performance on material E, S, and G issues outperformed. And that was sort of a big sentiment at the time. It was somewhat revolutionary. Again, we're talking 2019, then the pandemic hit. And in some ways, we were quite concerned about where we would go as a business, very small team. But then we started to take off as a firm. There was a lot more interest. And one of the precipitating events, somewhat unfortunate, was George Floyd's murder and corporations saying, we need to do better.
Mm-hmm. I'm curious on something you said a little bit earlier on the generational transfer of wealth, and then this concept of, maybe the younger generation being more concerned about social causes or the environment and wanting to devote, more of their dollars and effort towards things that improve the world holistically. Has that really panned out? Part of me thinks that, there is this segment of that next generation wealthy that thinks that way. And then there's this kind of like overriding sense that as people get older, they get more conservative. And so they're just going to want to, yeah, they'll have like a little bit of a sleeve here for impact investing, but really the bulk of their wealth is going to be focused on continued traditional wealth generation. Do you know how it's panned out for that thesis within like a Morgan Stanley or within another big wealth management arm? Has it really panned out such that that younger generation truly wants to materially participate in impact investing?
Another excellent question. So, a lot to unpack there. It depends, I would say, on how you measure success and what success looks like. If we go back to investment banks like Morgan Stanley, where I used to work, and whether they have successfully been able to build a platform of impact investments and have clients allocate capital to those impact investments. And frankly, from the investment bank's perspective, are they able to make money on that platform? Yes, that has panned out. You can see the growth of impact investments over time, assets under management for impact investments over time. And that growth has continued since, the late 2010s and continues to this day. I'd say another success is that you do see impact investments across all asset classes at this point. There are impact investments in cash, private credit, private equity. And so that is a success because you see that there's investing for impact happening across the entirety of the investment ecosystem. Now, is there more work to do when you look at environmental outcomes and social outcomes? And are we living in the world that I think many of us desire it to be, which is, less harm on the environment, more social progress? There's still work to be done. Now, my own personal philosophy is very much around incremental improvement. And so for people in the younger generation, they may look at it and say, well, we're not at the end goal yet. And so all of this work is for naught. But when I see incremental improvement, I see progress towards the goal. So yeah, that's how I sort of see it. I'm not necessarily always a glass half full type of person, but when it comes to this, I started from a place where, I just saw the term for the first time, and now we've got $1 trillion plus allocated towards impact investments. And to me, that's success.
And when we talk about impact investment opportunities, it could be looked at on a spectrum, right? You could have ones that are, let's say, all the way, it's pure impact investing, where the entire mission of the company is driven by a more pure, say, social or environmental cause. And it's almost like the product or service is secondary. On the other end of the spectrum, you could have a traditional corporation that's been in existence for hundreds of years that could be considered impact to a certain degree because it helps in, say, a healthcare product, a Johnson and Johnson, for example. So when we think about like, okay, how do you steer, say, a Morgan Stanley wealth management platform towards a specific program of impact investing? What is that actually comprised of? Is it these traditional that you kind of recategorize as like, oh no, they're impact. They fall within our purview? Or do you say like, or do you have to go hunting for companies and uncover them and they were Patagonia? I'm not sure how you would categorize that, right? Or there's ones that are now switching over into B Corp status because it's a marketing play to some degree. Like, is the founder truly interested in these causes, or are they doing it as a marketing play? So I guess this is a far-ranging question, but how do you delineate what is an impact investment opportunity?
So this is a perennial question, I would say, even within what you would consider the impact investing community. And to your point, I remember this was, probably late, again, to the early 2000s. And I was speaking on a panel at the UN, actually, and similar type of question came up. And I sort of spoke to the audience about a company that recognizes that the world is getting warmer, right? Climate is changing, it's getting warmer, population of the planet is growing, we need to feed people. And so they were looking at increasing crop yields, right? And also making crops more resilient to warmer temperatures. And you look across the room and everyone says, okay, yeah, that makes sense. That's impact investment. And I said, the name of this company is Monsanto. And everyone started to freak out. So there's this paradox of personal views, social views that an individual holds that sometimes clouds what you would consider impact. And that to me, I don't want to get involved in that type of conversation. That's a subjective conversation. And I think financial advisors, if they're working with individuals, can wade through that. And again, that's values, it's personal values. To bring it to the type of work that we're doing today at Stax, it's incorporating ESG analysis and mainstreaming that as part of our commercial products. So we have a product, and I look after an area of the firm that will conduct an ESG due diligence. So our clients are private equity firms that are looking to make investments in companies, and they hire us. One of the things that we do on the buy side is commercial due diligence. So we'll look at the growth factors, we'll look at this market, we'll look at customer profiles, et cetera. And as part of that work, we will also incorporate an ESG due diligence as part of the commercial due diligence. It's embedded within commercial due diligence. So again, this work is important to us. This work is important to our clients. I'm not that concerned with what we call it. We just want to improve the quality of analysis for our clients. We want to mainstream this work. I don't want to see it sitting separate from the work that we do. I don't want to see it considered separate. I don't view it as a bifurcated work stream. ESG and impact is over here, and traditional financial analysis is over here. It's one and the same. And again, that to me is progress. That's incremental progress. Now, all we can do is bring that analysis to our clients. What they choose to do with that information is entirely up to them, if that makes sense.
Yeah, and I think it can, in some ways, materially impact that private equity firm's long-term success because not only is it, doing the right thing by monitoring their ESG impact or risk mitigation, but it also shows LPs, their investors, that they take a more holistic view around investment. And increasingly, these pensions and endowments are wanting to see that in their investment portfolio. So I think it all kind of weaves together nicely. We're going to enter into the tail end of the conversation where I have two final questions. But maybe before we do that, tell us a little bit more about Stax, maybe its history, and I guess whatever else you'd like to mention about the firm.
Yeah, so Stax has been around for 30 years now. And, primarily, again, the work that we do is buy side commercial due diligence. We work with our clients, private equity firms, and the portfolio companies and the management teams of those portfolio companies during the hold period on value creation initiatives, value creation strategies. And then at exit on the sell side, we help our clients, again, the management teams, the portfolio companies. We work with investment banks here as well on helping to tell the story of the firm and also forward looking, the growth story, the potential growth story of the firm at exit, right? Matching essentially sellers and buyers at that point. We have offices. I'm located in Boston. We have an office in New York. We have an office in Chicago, London, and Colombo, Sri Lanka. We're a great firm, right? Obviously I'm biased. The way that I sort of view Stax is having worked at large institutional firms before. Morgan Stanley has something like 60,000 employees. And then I've worked at very small boutique ESG advisory firms. At one point, it was just myself and my business partner. The other firm that I referenced earlier was about 20 people. And at Stax, we're, around 250, 260 folks or so, and we have the best of both worlds. So yes, we have a small boutique feel where you pretty much know everyone that you work with, you know the clients well, but we also have sort of institutional capabilities. We have a dedicated marketing team. We have a dedicated operations team. We have dedicated technology folks. And that's all that you get used to when you work at a very large firm. But when you work at a very small firm, you don't have that. You have to wear many hats. So I like that we have that at Stax. I joined the firm, it'll be 2 years in July, precisely for this exact opportunity that I described before, which was a way to mainstream ESG. Broadly speaking, sustainability is what we're talking about. The labels now have been confused a little, right? I talked about impact. I'd never heard of ESG before. I'm almost using the terms interchangeably here, although there are some distinctions that perhaps we can have a follow-up conversation at some point on, but it's not neither here nor there for this conversation. But that's Stax. So we're privately held, and yeah, that's sort of a little bit about the firm.
Excellent. Last two questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, so my uncle, he passed away a few years ago, and his name was RJ Shah. He lived in Rochester, New York, and he was a businessman. He owned his own firm. I spent 2 summers with him, working with him when I was in high school. And there was actually an article written about him in the Rochester newspaper. They called him the Indian Bulldog. And I had never met someone like him before. And to this day, I've never met anyone who was like him. He was quite unique as a business person. He was an excellent person-to-person relationship individual. He was an excellent marketer. And I would sit with him at the end of the day. I worked at his firm, I interned at his firm. I'd sit in his office and he would just make phone calls and he would be talking to his clients. He'd be talking to prospective clients. And we'd have this way of having a relationship and communicating with individuals that I'd really, frankly, to that date had never seen before. And to this date, never really seen replicated in any other individual. He continues to be a strong influence on my life. I miss him dearly. But yeah, a really big influence to see someone, an immigrant, come to America, go to college, start a business, take risks, and become quite successful is something that I still really look up to.
Excellent. Okay, last question, and it kind of like overlaps with, I guess, what you do for your day job is like, can you tell us about a charity cause or other endeavor that you're passionate about?
Yeah, I'd say there's not one single cause or charity that I will bring up here. As I sort of noted, incremental improvements. It's just the little things that we can do in our day to make the world a better place. We all order so many things that come to us in the mail these days, and look at the packaging, the cardboard, the recycling that we do, that sort of stuff. When you're going down the street or somewhere local to, pick up a good or something that you might want, you don't need to take your car, walk or ride your bike. I'm a big public transport person, so I like when I travel for work, I always like taking public transportation. I love trying to figure out another city by understanding their public transport. So those are the kinds of things, that I try to do to kind of walk the talk that I do in my everyday life and in my professional career. I'm far from perfect on all of that stuff. I still drive a gas vehicle. I probably don't buy an electric vehicle for a long time just because I feel like sometimes it's impractical when I have to drive back and forth to New York and I don't want to wait for 20 minutes to charge my car, that sort of thing. So, it's just these little things that we can do in our everyday lives to make the world a little bit better place and sort of shape it in the ways that we can. So yeah, no one individual cause, but I hopefully it all adds up to impact at some point.
Excellent. Well, Anuj, thank you so much for this conversation. It's been a really great one.
You're welcome. Thank you, RJ. I appreciate the time.